So here's a 1-minute chart on NASDAQ, and you can see since we hit that liquidity, that was Asian session buy side liquidity, what has it been doing? It's in a holding pattern. Okay. What is this low in that low? Here to there. That's a relative equal low. Now, if it wants to dive down in there and disrupt that, that liquidity is the one I'd be looking for. But caveat, that low has a wick, or in this case, a shadow, okay, or tail. This little bit of business here, you want to make sure that you grade. I'm not going to do it with mine, but you want to grade that lower quadrant, consequent encroachment, upper quadrant. And if it takes out that low, it could only just go down inside this wick to the lower quadrant or the consequent encroachment of it. So not every relative equal low or relative equal high is the same. If your anchor point that starts the determination whether it's a relative equal high or a relative equal low, that means the furthest one to the left. Okay. This is a swing low. This is a swing low. If you're referring to that as the beginning point of defining your relative equal low, if that low has a wick, you got to grade it. Because if you're wrong, chances are it's only going to go down into upper quadrant, consequent encroachment, or lower quadrant, and then reject on you and go the other direction. That's kind of like where you're going to fail because you're going to expect that to be taken out and it won't. It'll just trade into that range and then that'll be the end of it. I mean, it'll go the other direction. Same thing here. You have relative equal highs here. Closest one to market price here has got to be rather lower than the one you're anchoring to. Anchor point is point number one, the higher of the relative equal highs, and anchor point to the relative equal lows is the lower one. If that low or high has a wick, if it has a wick, you have to grade that. And if you're in a trade or if you're paper trading or if you're tape reading and you're looking for it to run to that and go higher, always, always, without fail, never, ever, ever not do this. You have to take some kind of a partial. I like to use anywhere between the lower quadrant and consequent encroachment. So split that in half, and usually that's usually I'm trying to take a partial there. That way, I don't have to have the high taken out. It doesn't need to do that. And it doesn't need to trade through consequent encroachment because if it fails, consequent encroachment is going to tell you the information that you're looking for if it's going to fail. Because if it stops short of consequent encroachment, and it doesn't even touch it when it runs up, that's indicating what? Weakness. It can't even breach the consequent encroachment midpoint of that wick. So if it's going to go the other direction, that's usually indicative of what you're seeing when there's a wick in the relative equal high and relative equal low. And you see how I just explained that in a way that there's no way that I could have done it satisfactory, in my own opinion, doing that in a book. It doesn't communicate the same. At least for me, it doesn't. So I know a lot of you be like, see, that's why you shouldn't just do it. Just do everything in video. I do. It's why it's here. It's on my YouTube channel. That's why I said don't buy my books. But for the folks that do end up just buying the book, okay, you're going to look at these examples and be like, it doesn't feel the same. I don't feel like I understand it. It's because you have seen me teach dynamically over price action and seeing it deliver with examples, talking about it in X and talking about it in live streams. And when you were behind the paywall, you watched me talk about it all the time, every single day. It was panning out, panning out, panning out. So while books are wonderful and I love books, there's only so far a book can take you when it's very technical, like trading is and reading price action. So these are the types of examples that I hopefully bridge that gap between what I'm aiming for when I'm discussing it in print versus showing you to in the chart where it's likely to perform and what it's likely not to do and how it will behave. So